Welcome to another Headway Wealth webinar. Today we're going to be focusing on our sister company Cedar Crest, which was initially set up because when I was an expat, I really struggled to find expertise in the mortgage field to help with my UK mortgage. So we're joined today by one of our most senior mortgage advisors, Sam Harley, who's actually based in Hong Kong but here in the UK for a little while. How are you, Sam?
Yeah, all well, thank you. Thank you very much. And
Brilliant.
yourself?
Very good, very good. Excited to talk about mortgages and try and make them as exciting as possible. So I'm going to just let you introduce yourself, tell us a little bit about yourself, and then we'll go on to talk about Cedar Crest and exactly what it is we do and why we do it.
Yeah, absolutely. So yeah, I'm Sam, currently a mortgage advisor at Cedar Crest and based in Hong Kong. I've been living in Hong Kong for the last 6 years and previously in China as well, so I've been an expat for a while. My background is UK qualified financial advisor, but then decided to specialise on the mortgage side of things more in the last 5 years. And yeah, we've been focusing on helping expats and foreign nationals, whether they're buying a property for investment or potentially relocating to the UK, helping them all things mortgages.
Excellent. And all things mortgages for expats, it can be something very high street, it can be something quite niche and specific. Tell me a little bit more about that.
Whether you've just left the UK or you've lived overseas for a long time, there's this myth or idea that it's actually difficult or impossible for expats to get mortgages. So and typically, if you went and spoke to those banks that you know well in the UK, they would probably say no, they can't lend to you.
Yeah, it's the same with everything with financial planning as well, isn't it? You know, essentially, when you're thousands of miles away, sometimes it's not even knowing where to start. Most banks and lenders don't really feel like it's this whole new daunting experience of dealing with somebody that's offshore. Whereas really it isn't. We're British expats that have houses in the UK that maybe we've rented them out while we've gone for a couple of years post and that house needs remortgaging, or maybe a lot of expats like the idea of building a portfolio of buy-to-lets, and it's essentially where do we go? Now, what I think is that we live in a world of convenience and a lot of people want everything to be done. So they're quite happy to pay for somebody to say, right, can you go and find me the best mortgage rate? Can you go and see if I can be accepted on a UK mortgage? Can I get one as an expat? And I think essentially that's where we're getting at with Cedar Crest, is that it's being able to take away the hassle, especially the admin, because there's a lot of admin that goes into mortgages, but being able to facilitate this level of service for people that literally don't know where to start when they're so far away. And I suppose that's why we see a lot of doctors working overseas. You know, a lot of British expats like to see a doctor that's from their home country, that's maybe, as you mentioned before, qualified in the UK. And we are actually recording this at quite a pivotal moment, because I think the last 3 years they've been very interesting in the mortgage world. I think when interest rates initially spiked and there was this whole noise around inflation and stuff like that, obviously ease inflation, generally interest rates are increased. We've been used to interest rates being absolutely on the ground for the last 10-15 years. How did the spike in interest rates initially affect you as a mortgage advisor?
Well, yeah, it was a pretty chaotic time, just because the pace of the interest rate increases was so frequent. So as soon as inflation started rising, every single or most of the Bank of England Monetary Policy Committee meetings then resulted in a interest rate increase, which meant there was just a crazy inflow of people that had maybe already reserved new build properties that were then scrambling around to try and find finance or lock in finance so that they were able to complete on the property. And also expats that had maybe been on extremely low rates for the last 5 to 10 years were then suddenly panicking that my interest rates is going to go up, and this is going to cause a problem because, you know, I've been paying 1% for 10 or 15 years, and now the mortgage repayment might triple in some circumstances.
Can you remember at the peak what the highest interest rate was that you remember quoting someone?
Well, for it's quite dependent on the type of property. So for buy-to-let properties, for non-UK citizens, it was maybe 11% was what the best interest rate might be available for a particular type of client. But then even in best case scenarios during that period, you're probably looking at mid 6.5, mid 6%, 6.5, even close to 7. But luckily, we've seen that ease off a bit in the last 1 to 2 years.
So interest rates in the last couple of years have started to ease. Rates have started to come down. Absolute high street, normal UK resident, what kind of rate should they be expecting to pay at the moment?
Yeah, so the Bank of England base rate is currently 4.25% at the time of this webinar. Yeah, a pretty standard UK resident can be, for an owner-occupier mortgage, can be expecting rates around that level. Banks are still trying to be very competitive. The margin on the Bank of England base rate is very small, can be quite small for your main high street banks. So you might be looking at 4.3, 4.4, something like that. But then even for longer term fixed, because there is this expectation that rates are coming down further, although we don't know for sure whether that will happen, some banks are pricing even below the base rate just to be competitive and get that business.
Excellent. Now let's just explain the difference between a UK mortgage requirement for a standard UK resident employed to an expat, repatriating maybe, been living overseas for 10 years, or any kind of overseas investors looking to invest in the UK. What's the main differences?
Yeah. So I'll start with buy-to-let first. So with buy-to-let, actually there isn't too much difference in terms of, you typically need to put a 25% deposit down for a buy-to-let property, whether you live in the UK or outside. Interest rates are higher compared to owner-occupier mortgages. So there's actually not a huge difference for expats and UK residents on the buy-to-let side. So in terms of what kind of terms you can get, it's not so different, but the actual application process can be more in-depth, more complex, more documents required, maybe more questions asked by the lender, just depending on which country you live in, especially if you live in a country considered high risk, which is where where a specialist expat broker can really step in and help take that stress away from you, because we deal with this day in, day out, and we know what questions the bank are going to come back with, and we can help you make that process as smooth as possible. For owner occupiers, it is quite different, and this is where maybe expats can get caught out if they're going it alone or trying to do the process themselves. So for a UK resident, it's quite well known. You can get a mortgage even with a 5% deposit, even with no deposit as of this year, but that is pretty uncommon for an expat. So you're typically going to need to put down a much higher deposit if you're wanting to buy a property that you're eventually going to live in, or you're moving back imminently. For a lot of the lenders that will lend to expats, you're going to need at least a 20% deposit. So you're looking at 80% loan to value. There are lenders available that will go higher, so 90%, so a 10% deposit. But there's just fewer of those types of deals in the market, so it might be that not all expats qualify for that type of deal. So it's just important to know much further in advance that the down payment you're going to have to put down when you think about deposit, fees, stamp duty, is going to be much more compared to if you lived in the UK. And then also the biggest key factor is probably currency. So if you're paid in a foreign currency, there's typically some deduction for that to allow for currency fluctuations, which can affect your affordability. It's kind of a catch-22. Most expats are probably earning much more than they would in the UK, which increases affordability, meaning you can probably buy a bigger home or secure that dream home before you return to the UK. But there might be some factors on the other side, such as currency, which can maybe act in the opposite direction. So it's really important to speak to an expat specialist broker rather than just assuming I'm earning this amount of money, I can borrow 5 times my income, which is common in the UK. It's quite different on the affordability assessment.
Interesting. And essentially, most expats do look at when they move overseas. There's an element of a plan in their head, especially, somebody with a family moves overseas and they think this might be a fast way to pay off a mortgage or a house that I own, or buy the dream home, or build a portfolio of houses. So there's always a plan for them. The main type of UK mortgages available for international buyers right now, could you give me a quick outline as to what they are?
So in terms of the type of products available, you mean?
Yeah.
Yes. So I mean, roughly, it doesn't differ too much to what is available for UK residents. There are less lenders available for expats, but you're typically still able to get the same types of products. Say, for example, your loan duration would typically be similar. So for an owner-occupier, typically up to your state retirement age or longer if you can prove retirement assets or savings. And then you're going to usually have the option of like a fixed interest rate option, which would be 2-year fixed, maybe 3-year fixed or 5-year fixed, and also tracker rate options, which are either tracking the Bank of England base rates or there would be some kind of discount tracker rate offered by the bank.
Okay. Interesting. And how does, when we talk about affordability, how does proof of income differ for expats than it generally does for UK residents?
Yeah, so that's actually one part where that can require significant more work compared to a UK resident. So with a UK resident, especially if you're paid by PAYE, the format of a UK payslip is a proper official document. It's very well recognised. So that's generally accepted as income proof with not much further questions asked. With expats, as there could be many different countries that a bank may lend to, each country will have maybe a different way of providing payslips. Sometimes it's a PDF that anybody with a computer could have created. Some countries it's not common to provide a payslip at all, so the bank may need further proofs of income. This could be tax returns in the local country that show the income declared and tax paid. A lot of times, if the employer overseas does provide a payslip, the lender will also ask for an additional letter from the employer confirming the basic employment details around income, start date, as additional to the payslip and employment contract, more so as a KYC point as well as income proof, just because the UK is heavily regulated. Banks and lenders have to prove that they're doing sufficient due diligence on customers, and even more so if they live overseas.
Excellent. Fantastic. And why do you think the UK market is so attractive to overseas residents, expats, non-UK tax passport holders as well?
I think there's many reasons. And those reasons differ depending on where the person is from as well. So we do help a lot of foreign national investors that are still living outside of the UK, helping them invest in the UK, invest in the property market. And there's many reasons for that. There's pull factors from the UK, being that it is a very well established market, a mature market, a very liquid market as well. It has a large percentage of owner occupiers, which makes it a more attractive market for investors. And also the legal system in the UK around property makes it a very attractive market to invest because there's a lot of consumer protection or protection for buyers. And then there's also push factors from where the client may be resident, so they may not be able to easily invest in their home country, whether that's investing in the stock market or investing in property. They may want a place to move their wealth due to political reasons in their country of residence. So those are some of the key reasons for investors. And then, as you said, for expats, I think depending on where the British expat is located, it may not be possible for them to secure long-term residence overseas. And for a lot of people, it is temporary to be an expat, and there's usually that long-term intention to return home.
Everybody wants to come home eventually. How's the house prices in recent years affected buyers, and also the yields as well with interest rates? Obviously, house prices have gone down especially in London over the last couple of years. I think in the north of England, they've actually steadied or maybe petered up in the last 2 years. It's definitely got busier. Have you seen a difference in the trend in terms of like the appetite from overseas investors?
Yeah. So I think with the UK market, it is very large, and you can't categorise it as just the UK market. It's very different depending on the region. So typically from my point of view, being based in Hong Kong, over the last 10-15 years, even before I was here, there's a very strong interest in Asian clients buying in London, whether that's for investment or to send their children to school or to relocate as a whole family. That's always been very, very strong. But then as other regions have become more attractive, such as Manchester and Birmingham are having particularly strong growth stories just because of a lot of investment going on there, there's been more interest in, yes, northern cities, if you can count Birmingham as north, compared to London, which was historically basically the main point of interest. And then even more recently, with a lot of migration from Hong Kong into the UK, that's really opened up a whole other piece where there's lots of people interested in places like Cambridge, Reading, Kent, which was maybe not there before.
And you think that's a lot of that could be down? I mean, essentially, when I was an expat, a lot of foreign nationals referred to my home as London. I've never lived in London before in my life, and yet the UK or England to everybody overseas was they referred to it as London, not as England. So I suppose that could be a reason why a lot of people want to invest in London, despite house prices going down. If you look at it from an investment point of view, the yields aren't particularly great, but it is the capital city, and it is where, you know, the home of many, many big institutions and companies.
Yeah. Yeah. So London's still remained popular, but it's become more of like a lifestyle purchase rather than purely investment case. And then places like Manchester and other northern cities have really became attractive for both the yield and the capital growth.
How important is an expat's credit file to getting approval for mortgages?
I would say it is important, but not in the way that you might think. So it's not so much about the actual score, like the number that you see on the credit report, but it's more about credit behaviour. So firstly, for an expat, if you do still have a UK credit footprint, that's going to open up more lender options to you compared to if you didn't, for example. So I mean, we speak to many British people that have lived in the US, for example, and they've lived there for 20 or 30 years, and they've just got no history in the UK anymore, no bank account, no address. What we encourage those clients to do is to open a UK bank account and start building up a credit footprint, as that will open up more lenders, for example. A lot of lenders will want to know about things like if you've made your payments on time with your credit cards, loans, but they're not so much looking at the actual score. So a lot of people may ask me, you know, what credit score do I need for a mortgage? It's not as simple as that. They just want to understand that you're making payments on time for the debts that you have and that you're a reliable borrower. So some banks do this by asking you for a credit report or checking your UK credit score. Or there are still a lot of banks, especially the private banks, that don't ask you for credit reports, but they will manually ask you for loans, credit card statements, mortgage statements to make sure that you're making payments on time and that the level of debt that you have is still sustainable when considering the new mortgage that you're applying for as well.
Great. Taxes, surcharges, other things, as an expat or as an overseas investor buying a UK property, what kind of taxes and surcharges, if any, do they need to be aware of?
Yeah. So the key one for expats is stamp duty. So there's a surcharge in the stamp duty for anybody that lives overseas. So which will be a 2% extra surcharge on whatever the stamp duty would be had you been UK resident. So I would say it's not enormous, but it's also not insignificant depending on the value of the property. It could be quite a lot. That's just one thing to be aware of when you're planning for my down payment. How much do I need to put down to actually secure the property? That's one thing that can catch people out, as some people might think, oh, I'm British citizen, so I don't have to pay the extra 2%, but it's based on residency, not nationality.
So expat wants to buy their first home. Let's just use a little example there. A British expat has worked overseas for 10 years. They want to buy their first home. It's a £500,000 house. Their deposit on that £500,000 house will be roughly how much?
So hang on, let me get up my stamp duty calculator.
So their deposit alone, minus the stamp duty, would be £125,000. If somebody was buying a house, they needed a 25% deposit as a minimum. They'd need £125,000 as a deposit.
Yeah, well, it might be 20%. So let's assume.
Let's work on 25.
Okay, so
expat buying first home, been saving up for 10 years. They've got £125,000 saved up to put down as a deposit. What else do they need to pay in terms of stamp duty on a £500,000 house?
So, yeah, if in that situation, if they're an expat and this is a home for them to live in eventually, then the stamp duty would be £20,000 compared to £10,000 if they were UK resident.
Wow. And if it was a second home, there's an additional, is there additional 3%?
Yeah, so then we can thank Labour for this in last year's budget, but Labour also increased stamp duty on owning second homes.
Right.
So in this situation, if that was the client's second home, the stamp duty would be £40,000.
So buying a second home in the UK as an expat, on top of the deposit, if it was a £500,000 house, the deposit would be £125,000 and the stamp duty alone could be as much as £40,000.
Yes.
Excellent. Interesting. So there's stamp duty. Any other charges that they should know about or not?
Oh, it's nothing out of the ordinary for expats. So you then have your charges for using a lawyer to buy a property, which wouldn't be any different compared to if you were an expat or UK resident. There's charges for if you do use a mortgage broker. Depending on your situation, you might take tax advice if you're building a property portfolio, for example, but that doesn't apply to everybody.
Are there any common misconceptions that people may come across for self-employed, or is that something you can deal with as well?
Yeah, so that is the big misconception, is that a lot of self-employed expats think that it's just not possible for them to get a mortgage, which may have been the case in the past, but now there are more options for self-employed people based overseas. I would say there are less lenders available compared to being an employee, but especially for more of the high net worth individual where they can access private banks, they typically would all accept self-employed so long as you have sufficient trading history and audited accounts for the last minimum 1 year. Then there are options for you to get a mortgage. Some lenders will use combinations of retained profits and salary and dividends, which can also benefit your affordability as well.
Let's cover some common pitfalls. What do you think expats, big warning out there for them, what do you think expats should watch out for when buying a property in the UK or dealing with a mortgage broker?
Yeah, so I think firstly, yeah, when dealing with a mortgage broker, especially in the investment property space, there are a lot of mortgage brokers based overseas that are not FCA regulated, as they can still potentially introduce business to lenders, for example. I would say it'd be much better for the client to be dealing with a broker that is FCA regulated. Firstly, they'll have a wider panel of lenders, because not all lenders will deal with non-regulated brokers. And we have to adhere to higher standards in terms of giving clients suitable advice for their situation, not just recommending lenders that may benefit the broker more than the client, for example. So yeah, I would always recommend searching for an FCA regulated broker that can deal with expats. From the actual mortgage side or the application side, I think big things to avoid for expats is similar things that would apply for the UK. So if you are employed, you would typically need to be in a job for 3 months before a lender would count your income. Not every lender is like this, but if you do sort of change jobs and then apply for a mortgage and you haven't been in the job for very long, it does just limit your options. I think, especially for what I see with expats in Hong Kong and maybe the Middle East as well, salaries are maybe higher than what they would get in the UK and taxes are lower. It's kind of very easy to inflate your lifestyle very quickly. It seems to be a lot easier to get things like credit cards, personal loans, compared to what it is in the UK. So sometimes you come across clients where they are earning very well and they're still living within their means in terms of they're not spending more than their income, but they might have a big flash apartment in their country of residence with a high rent. Might not be high by the standards of Hong Kong or the UAE, the country that they're living, but the UK banks see that as a big fixed commitment, for example. So just in general, things like living sensibly within your means, not just taking out any credit card deal because it's a low interest rate, can quickly reduce your affordability just because you've inflated your lifestyle so much.
Okay. I think also, just to add to that as well, there are a lot of salesmen out there that are working in the Middle East, the Far East, that are selling property developments that are quite far down the line of completion, and people are committing to a lot of these. Nothing wrong with them, but maybe keep an eye out for more reputable companies that might actually have a track record of releasing these properties for investors. Do a bit of research on the area that you're actually buying in, etc., etc. Very important as well. Any recent success stories that you'd like to maybe chip in? Let's not forget we have the ability to work with private banks. Sometimes people do need extra, something slightly different.
Yeah. So yeah, there's been a couple of recent ones that come to mind. So we had a client based in Qatar who had approached us to help him find a mortgage for his long-term home. He wasn't yet returning to the UK, and he firstly had tried a few other brokers who had not been able to find him a mortgage, because I think in the past Qatar had been quite a difficult country, but now there are many more lenders that accept it. But also this client had a quite unique situation with his contract where he was actually living in Qatar, paid in Qatar Rial, paid in GBP, and also paid in euros. Some of that was paid in Qatar, some of that was paid in the Netherlands, and some of it was paid in the UK, which meant a lot of lenders just didn't know how to deal with this. But just understanding really in depth what expat lenders want to see, and being able to communicate that clearly to the lender enabled us to find him a solution for an owner-occupier mortgage. We had another situation recently where this was a client that was maybe approaching UK state retirement age, and they were still working, but maybe were not planning to work for much longer. But they were living in Hong Kong, but wanted to buy a home in the UK for themselves to use while they're in the UK. So with this client, we actually approached a private bank because they might be more relaxed about their client's age if the client can prove affordability in other ways. So in this situation, we didn't actually use the client's salary as an income proof, because a well-known high street bank, for example, said that we would have to assess the affordability over just 1 year in order to consider him, which was difficult. So instead, the private bank were able to use the value of his portfolio to calculate an assumed income level. And because he had a few million US dollars invested, he was able to use that as an affordability source to secure a mortgage, even though he was close to 70 years old.
Great. So essentially what we're trying to say is, for expats out there that are looking for support in getting finance on a UK property, to be able to mortgage a UK property, that they should really get in touch with us, let us know their problems, and we will essentially do what we can to find the solution. And that's what they're paying for. Is, if you might be the 70-year-old man who doesn't have huge income, or if you are the expat paid in multiple different currencies, an expat that is self-employed, an expat that is in a high-risk jurisdiction, that we can go to the lenders with exactly what they need and potentially find them a solution. So it's a great time for people to get in touch with us.
Yeah, I would say, really important to just engage with the broker early, because we can firstly understand what is your current situation, but also if for example you are in a situation where it might be challenging to get a mortgage in your current state, but if you made a few changes to how your changes to your expenditure, for example, or maybe changes to how your income is reported, or maybe we need to get your accountant to provide some kind of confirmation on how your business is forecast to run in the next year, for example, we can help you position your profile in a much better way to lenders if we're engaged early and can work with you.
Great, fantastic. And now's a great time because interest rates have steadied out. I did see this morning that inflation in the UK rose last month by 0.2%. I'm not sure if that might rise again with Mr. Trump's tariffs or not. So maybe now is the time to lock in a fixed rate. Sam, thanks very much for joining me. Thanks for your time. Thanks for your great work. And we'll speak soon.
Yeah, thank you very much, Hamzah.